Monday.com Fiscal Year 2026 Q2 Earnings Call Summary Introduction. Welcome to the summary of Monday.com Second Quarter Fiscal Year 2026 Earnings Call. We'll cover the key financial highlights, management's outlook, and critical insights from the leadership team. Key financial metrics and performance. Revenue. Monday.com reported $365 million in revenue for Q2 FY 2026, a robust 22% year-over-year growth. Non-GAAP operating margin. The company achieved a 17% non-GAAP operating margin, an expansion from 15% in the prior year. Gross margin. Gross margin stood at 89%, a slight decrease from 90% year-over-year. ARR milestone. Monday.com crossed the $1.5 billion ARR, annual recurring revenue, mark in July, demonstrating the resilience of its core business. Net dollar retention, NDR. Overall NDR was 109% for the quarter. Management anticipates modest pressure on NDR in the latter half of FY 2026 due to lapping prior pricing actions. Customer growth. The company saw record net additions of $100,000 plus and $500,000 plus ARR customers, highlighting strength in their upmarket strategy. AI ARR. AI ARR doubled from Q1 to Q2, now representing 17% of net new ARR added in the quarter, indicating strong customer adoption. Free cash flow. Adjusted free cash flow for Q2 was $52.3 million, with a margin of 14%. Management's financial guidance and forecasts. Q3 FY 2026 outlook. Revenue. $368 million to $370 million, 16% to 17% year-over-year growth. Non-GAAP operating income. $57 million to $59 million, approximately 16% operating margin. Full year FY 2026 outlook. Revenue. $1.466 billion to $1.474 billion, 19% to 20% year-over-year growth. Non-GAAP operating income. $230 million to $234 million, approximately 16% operating margin. Adjusted free cash flow. $280 million to $290 million, 19% to 20% adjusted free cash flow margin. Significant risk factors. Workforce reduction impact. A recent 20% workforce reduction on July 22 introduces short-term operational disruption and has been factored into guidance. Foreign exchange, FX, impact. The appreciation of the Israeli shekel against the US dollar had an approximate 210 basis point negative FX impact on operating margin in Q2 and is expected to continue impacting costs. NDR pressure. Lapping prior pricing increases may lead to modest pressure on NDR in the latter half of the fiscal year. Uncertainty in monetization. While AI adoption is strong, the long-term monetization of AI solutions and its impact on NRR stabilization are still evolving. Go-to-market transition. Shifting focus to upmarket and enterprise sales, along with changes in down-market resource allocation, involves execution risk and a period of transition. Monday Dev strategy. The strategy for Monday Dev is under review, with less focus currently compared to CRM and service. Highlights. Strategic shift to AI workspace. Monday.com has successfully transitioned to building software that does the work, with people and AI agents operating together. Accelerated AI adoption. AI ARR doubling quarter-over-quarter and representing 17% of net new ARR is a significant indicator of customer embrace. Strong upmarket performance. Record net additions in the $100,000 plus and $500,000 plus ARR customer cohorts demonstrate the effectiveness of their enterprise strategy. New pricing model success. The early reception to the new seat and credit pricing model for AI products has been strong. product focus, dedicated product development, and go-to-market motions for Monday's service and Monday's CRM are expected to drive category leadership. Organizational restructuring. The reduction in force and restructuring are aimed at creating fewer management layers, smaller teams, and increased decision-making authority. Gross retention at historical highs. This indicates strong customer satisfaction and stickiness. Lowlights. Workforce reduction. The decision to reduce headcount by 20% was acknowledged as the hardest decision made by the company. Modest revenue guidance moderation. The full-year revenue guidance was slightly moderated compared to previous expectations, reflecting the current transitional phase and workforce reduction impact. NDR pressure. The anticipated modest pressure on NDR due to lapping pricing actions. Slower expansion in core products. Net new ARR from CRM, Dev, and Service was softer than in past quarters, attributed to the down market slowdown and AI pivot. Most important statements from CEO, Roy Mann, and CFO, Ellering Glazer Roy Mann, co-CEO. Over the past 9 months, Monday.com has undergone the most meaningful strategic shift in our history. We moved from building software that helps people manage work to building software that does the work, with people and AI agents operating together in a single unified workspace. Our Q2 results reflect the strength of the business we are building from. Q2 revenue grew 22% year-over-year, while Q2 non-GAAP operating margin expanded to 17%. More telling than any single metric is that AI products adoption continues to accelerate and customers' response to our new direction continues to exceed our expectations. Ellering Glazer, CFO. Total revenue in Q2 came in at $365 million, up 22% from the year-ago quarter. For the full year 2026, we expect revenue to be in the range of $1.466 billion to $1.474 billion, representing growth of 19% to 20% year-over-year. Our guidance does not assume any rebound in performance marketing or top-of-funnel activity. This is in line with what we said in the past, and we plan the year based on the current condition with growth driven by our main upmarket and enterprise customer expansion, as Casey mentioned, AI adoption, which is really encouraging, and also disciplined investment and efficiency, taking advantage of some AI capabilities internally. We expect headcount to be down approximately 20% at the end of fiscal year 2026. This summary provides a detailed overview of Monday.com's Q2 FY 2026 earnings call, covering the essential financial and strategic information for a comprehensive understanding of their performance and outlook.